Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar. This is effective for April 8th, 2024. Let's get started. SEAF signals for this week, energy, industrials, and communication for the second week in a row. What is that telling us? We do see some conviction here, show a little bit more in the heat map, but a couple of weeks in a row with the same sectors really means, I think some of these managers have found the home that they've been looking for over the last couple of months as we've seen a lot of churn previously in the SEAF model. So seeing a couple of consistencies is great. Um, yeah, I mean, looking here, trading week, 1, 3, and 2 for our top three, 1, 3, and 2, and 3, 2, and 4 with technology kind of holding on to that one spot for a little bit longer in the strategic quarter. But obviously, with the more recent timeframes for technology being relatively weak. That is just kind of a legacy holding here that's keeping technology in the neutral despite having net outflows really for the last month. Um, Other key things to kind of note here is healthcare really kind of having that struggle here at the bottom, as well as seeing materials still kind of holding up the fort and financials being in that mid tier. Key thing to note as we switch over here to the heat map is after materials, we were actually a net loss from down on the trading week. Five through 11 was all either zero or a net outflow in flows. Materials ever so slightly being positive, and we actually had a net outflow in total of 1.2% last week for the entire all of the sectors. Um, Uniquely enough, though, energy having a 0.68% increase. So a lot of conviction in energy. Industrials at 0.11 at number three for the trading week, but broadly still positive as that it looks to cool down just a little bit. Not to mention, energy is just kind of on a heater. We are seeing that consistency that I always like to see, where we're kind of clumping up toward the top. Our numbers are all checking in the top four here. So again, that means the momentum is building and that we have some conviction here. Outside of these top three, even top four here with materials, seeing a little bit of a negative outflow from the market. And I believe technology down on the tactical month is all negative in terms of net flows. So, you know, kind of really being able to avoid this bottom half with the exception of, we see technology at 1, which is more of a legacy number that seems to have passed, and moving now onto energy with that top 2 and really strong inflows in energy this week. Heading into our rainbow charts, starting off with consumer staples, broadly having this negative downtrend in relative outperformance. As you've seen, we spent a significant time in this past year in the avoid, uh, with little spurts of neutral to favored, heading in for a positive relative performance, but broadly keeping that trend. And we continue that trend here as we are, pretty low here on the relative performance for consumer staples as it stays a heavy avoid. Healthcare in a similar boat. See here for healthcare, we were sitting in that neutral favored. That kind of turned into a little bit of positive and somewhat sideways movement in that relative performance. We have now hit deep avoid for healthcare, and we're making fresh lows for the relative outperformance versus SPY, and continuing that broader downward trend that we've been seeing. Healthcare just hasn't had enough time sitting in that favored ranking to really build up any momentum in its relative performance for this past year. Now into energy. Energy is shooting up like a rocket. The interesting too with energy, it seems to be a lot more sticky than some of these other other sectors. As you can see here, you kind of get this prolonged avoid, which correlates to that negative relative performance, a prolonged up movement that we saw toward the end of last year that correlates with that positive relative performance. And it appears, without doing any kind of projections or anything, because we don't do that here at Asbury, but without you know putting on our projections hat too much. Energy does seem to trend a lot more than some of the other sectors, sitting up here in this highly favored ranking. Again, as I said earlier, 0.68% increase, which is well above average for this year. in terms of the net flow on the weekly basis, really correlating to some positive relative outperformance, even breaking through this resistance point on the chart and heading into new highs. With the stickiness of energy, I think we could feel pretty confident going forward right now with energy as the flows have been very strong. Industrials, not as quite as strong as energy, but still, we're spending a bunch of time up in that favored ranking, which is correlating to this positive relative performance versus SPY. This comes after we've been in a relatively sideways pattern here for the last year, breaking, testing, if not breaking through this resistance point happening back in December. Ideally, we break through this as well if we can continue to see some of this favored ranking. But we did a little bit of a check mark last week in the Asbury SEAF rankings, and industrials remains strong. Last but not least, my little engine that could, communication services, continuing that positive uptrend after a little bit of a sideways movement, sticking in this favored ranking, and overall being favored for the better part of the last year. The relative performance isn't spiking like it is with energy, but we aren't seeing the flows being consistent like energy is. A bit, 0.19% inflow for this last trading week, which is a relatively strong flow over the last couple of months. Again, not touching energy levels, but still relatively strong, and you see that in the relative outperformance um, in communication services. That is all I have for this week. I hope everybody has a wonderful week, and I look forward to breaking down the SEAF model with you next week.